What's going on, everyone? My name is Nicholas Merton here from DataDash, and today is May 29th of 2023. Well, folks, I hope you all are having a fantastic day wherever you are, because in today's video, we've got to spend some time to talk about why whales and institutions are starting to smell blood in the street when it comes to Bitcoin. We've got to look beyond normal price action and take a look at some charts that are signaling that institutions and large investors are believing that there's much more pain to come than future upside potential when it comes to Bitcoin and crypto assets. These are some charts that no one is watching, so if you guys happen to enjoy this video and like these insights, consider dropping a like. It's one of the greatest ways you can support the channel, and it's free to do. And outside of that as well, we've got a sponsored review of Credits, a new fintech application that's coming out to the market, so stay tuned for that. You guys won't want to miss it. All right, let's go ahead and kick off the rambling. So I want to go ahead and just again talk about the core price action here. Really, over the past couple months here, since back in March, we have not seen any significant change. However, over the past few days, we did bump up from around 26K up towards around right under 28,000. Again, as much as we had pulled back here below the overall general resistance range, and we had been dipping below here for some time, I want to make it very clear that we are not calling for any panic moves or anything, guys. We are waiting for our momentum indicator. Now, that's again why some of these moves can really throw people off who are over leveraged or over positioned or expecting things to drop like a rock immediately. We have not gotten the red flip here on our momentum indicator. That being realized, Bitcoin's got to start making a move here over the next couple of days and possibly even this week. Or if we dip lower, back recouping some of those gains, or essentially going back towards recouping some of the losses we had previously, that's going to take us into a position where we get that red flip. And that's going to be one of our key triggers to actually enter into a short position. That we finally have proven that this range of prior support back in 2020 and 2021 is no longer going to be support, but rather resistance. Now, I want to go ahead and talk about some of the charts that I think no one is watching at the moment. I have not seen anyone talk about these before. It's something that I like to look at as a trader. You guys know this if you've watched the channel as far back as 2017. We like to look at ratios. We like to look at premiums and discounts. We like to look at anything that can go beyond just analyzing the price itself to see whether or not people are really willing to pay a premium. Because if people are willing to pay a premium against other assets, against kind of the fundamental underlying assets themselves, then essentially we can start to see if people are really optimistic or euphoric. That's a really good telltale sign that optimism is here to stay, that we can really propagate a new bull market and things can start getting better, right? That's what everyone wants. But on the other end of the spectrum, we can start to see through various charts that the opposite is playing out. People are not paying a premium on Bitcoin or Bitcoin-related assets. And let me go ahead and demonstrate some of these charts. We're going to first start by taking a look at some equities in the crypto space. And when I say equities, I'm talking about publicly traded stocks on the US stock exchanges that are tied or affiliated to the crypto space, who essentially, if Bitcoin's underlying price goes up, generally we should see that these companies are trading at a higher premium. We should see that Wall Street is getting really excited, because for a lot of big institutional investors, we're talking about the big bucks here, billions, hundreds, if not tens of hundreds of billions of dollars that want to flow into this space. In many ways, they can't directly invest in cryptocurrencies themselves. So sometimes you will see, especially during bull markets, that the equities of companies or the shares of companies related to the space will start trading at a significant premium. So let's go ahead and take a look here at MicroStrategy. MicroStrategy is one of the biggest names we could probably look at when it comes to Bitcoin. And this is probably one of the best vehicles for people to get into the crypto space if they're a traditional Wall Street tycoon, major hedge fund in the traditional financial space, you name it. Any type of investment vehicle, MicroStrategy is the way to go, because they have essentially opted in for monetizing their current revenue stream and utilizing this credit that they were able to borrow off of that revenue stream into investing into a large stake of Bitcoin. So they've made their big bet here. You guys know Michael Saylor, you know MicroStrategy. He has that 5, 10, maybe 20-year time horizon here with his Bitcoin position. Well, let's go ahead and see how Wall Street is, whether or not they're paying a premium or discount. How are they betting on MicroStrategy? So in order to do this, you guys can make this chart yourself. You simply type in MSTR, make sure that you basically, I'll go ahead and just kind of show you guys how you build these charts. Type in MSTR in the case of MicroStrategy. We use the down arrow here on tradingview.com in the search bar. And then essentially we press the divide key here, and then we're gonna go ahead and we're gonna type in here BTCUSD, go down a couple times with the down arrow on our keyboard down to the all-time history index, and voila, we've got the chart here. I've already got it pulled up, but it should pull up here on your screen as well, and we're on the weekly time frame. Now, take a look here Let me go ahead and turn off all the drawings here. Just focus here on the overall ratio. Okay, so what we're seeing here, and I would really recommend not to worry about the number on the screen, but worry about whether or not this chart is going up or down, generally speaking. Okay, so we're looking back since 2022. So since back here in January 2022, when Bitcoin has made some really substantial moves here, right, during this period of time, we had a major bear market correction, and we've also since back in January seen a really optimistic recovery in Bitcoin's price, right? Well, what's MicroStrategy doing here? MicroStrategy has not seen any significant change. In fact, it's been in the same position it's been since back here in July during its capitulative range, or back here in May, right? So generally speaking, MicroStrategy has been pushing sideways and generally is on a longer term downtrend since back in 2020, since it built its position. So we're not seeing Wall Street, going all in and paying a premium like we've seen in the past for other Bitcoin related equities. So that's not a good sign here. That's not a sign that Wall Street is absolutely euphoric and optimistic. Then again, I'm not here to say that this looks totally terrible. This is actually one of the better ratios here. And I think it's because it has a low risk, direct exposure to Bitcoin, whereas some of the other places we'll talk about here have better risk premiums if things start to get good. And those are the charts that we can really start to turn towards to see whether or not people are optimistic. Now, a great example here, right? Since back in June, when we had the, not our absolute capitulative lows, but we had the first kind of wave and then the second one here in January, right? We have seen that these equities have started to trade at premium. This is Riot. So Riot Platforms is one of the largest US publicly traded miners in the blockchain space. And to be fair, we have seen that it expanded here during these waves of time when Bitcoin started to move up in price. However, we are not seeing that premium continue here. Very much like back here in August, throughout October, we are starting to see those premiums stagnate. So Wall Street is pumping the brakes a little bit here. And just like back in August, during this same range, this range which used to be support back in January 2022 through April of 2022, which was broken, is now starting to act yet again as resistance. This is not a good sign, folks. We should be seeing Wall Street. If the institutions know something we don't, and it is optimistic, we should see the prices or the ratios specifically are starting to move higher here. And that momentum indicator is getting very close to potentially getting a red flip like we had in October, which preluded or basically led up towards the collapse of FTX here going in November and December. These companies are already trading at a massive premium here, right, comparative to where they were back a couple months ago. Now, of course, they're, again, on a general decline over time here. These companies, again, as they go through time, they have to issue new shares. When they get optimism like this, they dilute their share base. That's just what happens. But again, that only can continue to happen if they continue to maintain optimism. If they don't, that ratio starts to go down big time. And it signals that there's still not enough capital to satisfy the overall supply of Bitcoin. Essentially, there's not enough demand to meet supply. I think one of the biggest telltale signs here, right, before we take a look at the ultimate chart that you guys need to see, take a look at Coinbase here. Coinbase, time and time again here, our momentum indicators distorting it a little bit. But I mean, we're just going to go ahead. Let's turn that off here. Let's just, again, hide all. Just take a look here. This is Coinbase divided by Bitcoin. Now, I have nothing directly against Brian Armstrong and the team at Coinbase. They've pushed this space forward in a lot of ways. But whether you like crypto or not, whether you're a bull or a bear, no matter where your position is, this ratio does not look good. Every time Coinbase is seeing some strength, institutions, whether they be insiders of the company, whether they be large shareholders who had exposure, they are selling those relief rallies. And ever since January, after we had a little bump up here, we've been moving lower and lower, right back into territory we've been in May or in December of 2022. This just doesn't look good, guys. I mean, Coinbase is one of the largest, it is probably the largest publicly traded company in the United States where you can have direct exposure to the crypto space. People are not buying the dip. This is not good stuff, guys. This is really not good. It's not a good look for the space. It's not showing any signs of exuberance or this kind of bank run that people are talking about. I know one of the other vehicles that people could take here, if there really was this major bank run, large private investors, money managers, you name it, hedge funds, would take their money out of treasuries, they would take them out of dollars. And if there was really this bank run going on, they would go out and buy public traded equities. If there was hyperinflation, as people are worried about, or maybe de-dollarization, people will be stacking Coinbase shares because of expected trading revenue. But they're not doing that. So those narratives have fallen flat. We've already discussed that a good amount. But if all these charts weren't enough, guys, maybe you might make an argument that, hey, MicroStrategy shouldn't be trading too much of a premium, Nick, because now they have such a large Bitcoin position. They've solidified their business model on holding those Bitcoin. That's the reason you invest in MicroStrategy. It's like a pseudo Bitcoin ETF, if you will. It shouldn't be trading in any changing ranges. Fine, fair point. Maybe Coinbase and Riot, in this case, they have moved up a little bit, and they're just kind of sitting sideways until Bitcoin does something. Fair point, right? Those are fair arguments to make. But you cannot dispute this next chart. This chart here tells us the ultimate answer, and that is that there is still too much supply versus demand. Today we're looking again, as many people just have forgotten to take a look at. It used to be such a huge topic of discussion, but it is ever more relevant here during these times when Bitcoin has started to move up since January. We need to take a look at the Grayscale ETN. This is the Bitcoin Trust ETN, or exchange traded note, that Grayscale, one of the largest corporate entities in the crypto space, has founded, and basically has a one-to-one backing with real Bitcoin. At least that's what we've been told. So if we take a look at the Grayscale ETN Trust, right now, the current market price comparative to the underlying Bitcoin, or the market value of these shares combined against the actual Bitcoin that they claim to have backing each share, is trading at a 43% discount. That has been continuing to grow. That discount has been accelerating since back here in March and April, while Bitcoin's price has been relatively neutral. And while it is still higher than where we were, say, in December or here in February of 2023, we are not making progress back to the upside. Now, I just want to ask you a simple question before we talk about some theories around this. Does that look like bull market activity here? Because if we take a look back at Grayscale, if you look back in the previous years when there wasn't enough supply, this ETN used to trade at a premium, right? And when things would get optimistic, like when we went into 2019, you can see here clearly after the bear market in November and December 2018, this thing started to accelerate right back up. The premium practically doubled from around 18% to 36%. So this is, again, as what I was talking about earlier, when there isn't enough investment vehicles, there aren't enough ways to get into the crypto space, when the space is essentially, basically starting to move up, like the value of the crypto space, the optimism, and the entry vehicles are limited, people pay a premium. But nowadays, there's so many crypto equities. The space is so diluted. So many companies are still overvalued from this point on. Bitcoin itself is still trading at a pretty high premium compared towards this contractionary environment. And the question we got to ask ourselves is whether or not this discount is going to be bought up. If it hasn't been bought up here since back in March of 2021, and it's gotten worse since then on the broad scheme of things, really over the last 3 years, what does that tell you about the balance between supply and demand? It tells us that if we ever want to think about there being a new bull market, we got to find some demand that's going to make up for the hundreds of thousands of Bitcoin that are underlying in this ETN. There is a big contraction or contrast between the demand and supply right now. When we're talking about institutional investors, Wall Street investors, people who are buying through their brokerage accounts, right? Many of them can't go on to Coinbase or go on to Kraken or Binance and go build positions. They have to be stuck with this ETN product. And even if they aren't, if they could go out there and buy other things, this really shows us that Grayscale has to do one of two things here, right? They either need to sit here and hope that someone's going to come in and buy up this, these ETN shares, take advantage of this arbitrage opportunity, or they're going to have to unload Bitcoin onto the market eventually and pick up the sell rate. They've already been unloading about 300 Bitcoin per week. They're hoping to do this in a more passive way. I do not think that they're going to be able to do this forever, because there is a key problem here. This discount is only going to get worse, right? And this discount sitting here at 42%, 43% roughly speaking from the spot Bitcoin tells us something. That right now, there is an arbitrage opportunity of up to 43% Someone could build a multi-million-dollar position in Bitcoin at a massive discount, almost nearing 50%. And no one's taking that opportunity? That tells us something is very wrong here. Something is really not set up here, especially we're not set up here for another bull market, for that matter. Right? And again, we talked about the kind of Bitcoin to NASDAQ ratio. Well, we've accelerated since up in November. Again, as we enter into this range of resistance, this has been moving lower here by about 20% since back in April. And if we snap below this previous line of resistance that was broken in March, if we cannot hold this range and we move back down, I think we're going in, as we've analyzed with price before, towards a third lower level for Bitcoin. That is where perhaps we could find our bear market low. I'm not here to be bearish on crypto forever, guys, but we need time for two things. We need to get lower prices, more capitulation in the space, especially considering the traction that's going on and the sentiment. But on top of that, we need to understand that there needs to be more time to find real narratives, real value propositions. There's not much going on in crypto right now. Why should crypto just kick off into another bull market? There's a clear reason why we're stagnating here, guys, and it's what we've been talking about for months now. We are not prepared, especially with what the Fed is doing, for a new bull market. Case in point, I want to share one last chart here, and then we're going to dive into the review for credits. I just wanted to go ahead and hit on one thing here. This is a really interesting chart that a ratio I created the other day. And while I don't want to speak towards the reasoning of this is a chart between Bitcoin divided by the NASDAQ, or excuse me, Bitcoin divided by NVDA. So NVIDIA is the largest GPU manufacturer. We talked about NVIDIA the other day, and basically they're one of the best poised companies to benefit if generative AI becomes the new trend, right? And this really becomes something that takes off over the next couple of years. What I find really fascinating is that this has also been, just generally being a GPU manufacturer, this has been a very high growth stock. And what I find interesting is that there are these periods of time where it is much more favorable to be long either Bitcoin or NVIDIA. Here from 2017 to December 2017, within this annual period, basically Bitcoin made a massive multiple against NVIDIA. If you want to kind of measure it here, it's generally about a 900% move or a 10x. That is a big, big move here from one asset to another. So in that period of time, when we get in that low range, it's beneficial to be in Bitcoin. But on the other end of the spectrum, when we get up towards those highs, it's usually best to be in NVIDIA as a play. At least you're going to either face less losses, or more specifically, might even be able to make money during that period of time. And of course, there's this mid-range here where we've been holding up since back in 2018 into 2020, and even up into this point here in 2023. However, we've snapped below that range here. And I think that the demand for the GPU narrative around AI is going to take this ratio back to where it was in January 2017, August of 2015, and April of 2013. That the AI narrative here is going to hold up, maybe make a little bit more gains from this point on, considering the report we got from NVIDIA, its quarterly reports. And then Bitcoin is going to continue to move lower here. We get that continued price decline in Bitcoin, NVIDIA remains relatively where it is, maybe moves a little higher. That's how you get that ratio there. We're not calling for doom and gloom here, guys. We're not saying Bitcoin's going to $0 or down to $3,000 or some absurdly low number. We're saying that Bitcoin's got a chance to go down to $12,000. And that could be our bear market low. Right around that range. A nice capitulative low. Altcoins get flushed. We get rid of all the noise, all of the fake valuation out there. Now that the market makers are gone, reality kicks in, valuations drop down to fair value, or at least where the market finds fair value. And that's the end of the story. We're ready to kick off a new bull market. By then, we will have had the time for Bitcoin to start basing out and start preparing for that next move. And I promise you guys, as we short down towards that expected range, we will be taking profits and building positions in. We won't exactly wait for 12K. We'll slowly start to average in, stack positions, and get ready for the long-term trend. I'm here with you guys during bull and bear markets. I will always be here, but I got to be honest with you guys when I tell you all what I'm feeling about the market. We had a deviation here, like we have had time and time again, above this range. I think we've got a deviation coming into this range here, and that's where institutional investors are going to be buying big. At least that's my thesis here. Again, you guys come here for my honest opinion, and I'm always going to give it to you. If you guys enjoyed the core thesis or the kind of coverage we did here in the channel, consider dropping a like. It's one of the best ways you guys can support the channel. And let's go ahead and dive into this really exciting review of credits, which could be one of the next leading crypto fintech applications in the next bull run. Alrighty everyone, so in today's sponsored review, I want to spend some time to talk about a really exciting mobile application in the crypto space that could massively disrupt the industry over the next coming years, but on top of that could be a leading mobile application and infrastructure play going into the next bull market. Today we're going to be talking about no other than credits. Now for those of you who haven't heard about credits before, credits has been around as far back as we've been operating our channel, all the way back in 2017. And there's seasoned veterans in the crypto space that have been building not only their own blockchain, but a ton of different infrastructure tools and technologies within the crypto space for high throughput and scalability. But now they focused on trying to build a consumer-facing retail trader investor-focused app that is focused on not only providing cryptocurrency services, but taking a crypto-centric focus with its application design and pairing in traditional neobank or traditional bank services all into one application. This is a really big deal in my mind personally, because if you think about it, a lot of the leading exchanges, whether it be Coinbase, Binance, or Kraken, while they may offer more than just exchange services, they don't really provide a full-scale banking experience, allowing you to do international payments and specific types of transfers, as well as niche features that you would expect in a traditional neobank application. And this is where credits is aiming to focus on. Not to mention, the market opportunity here is massive. So I want to go ahead and talk about a couple different things. I want to talk about what credits has to offer as an application, what problems it's solving. I want to talk about the user experience so far in the application, where the application is, and on top of that as well, how credits is aiming to scale here over the next coming months through a major raise. So we've got a lot of things to dive into. Let's go ahead and kick it off. Now, to understand what credits has to offer here, we need to just go through the massive list of features that are offered within the platform. First off, they have a Visa MasterCard network that allows you to have a crypto debit card, allowing you not only to spend your crypto, but also as well to be able to spend your fiat currencies like euros or Great British pounds. The major focus of the credits application is to serve a global audience long term, and they already can service the vast majority of European economies as well as the UK, and they're focusing as well on providing support to Hong Kong and Latin American markets in the future. But for now, this already covers a huge range of those of you who watch the channel here, and you can not only have a virtual card but a physical one as well to spend your crypto directly, or to be able to spend your fiat currency account as well. Outside of this as well, there's a European IBAN account. So you can have traditional IBAN accounts, SEPA transfers, all the infrastructure that you're used to in a traditional bank account. The idea here is that you don't have to have your savings in a traditional bank account and then transfer them over to credits. Credits is a compliant application that already baskets in all of those services from leading industry service providers in a seamless user experience from your mobile phone. So there's no need to have 2 or 3 separate applications for different services, like maybe your investments or your banking or then your crypto services, but rather all in one simple streamlined application. And of course, with this, you're able to do a full scale of payments, not just cryptocurrency transactions, but of course, global transactions, foreign exchange, and also different types of investment services, as there's going to be more features throughout time. Now, for now, there's already cryptocurrency investing services where you can buy and sell cryptocurrencies and be able to scale out a lot of the fees and high cost transactions that persist in the space for a lot of these more simple, seamless user experience applications. I want to go ahead and dive a little bit in here towards talking about some of the problems that credits is solving, because there's all of these features here within the application, and I think that already gives us a good idea here about why credits itself could be a valuable application. But we first need to really kind of take a step back here and view things from a macro perspective. The crypto industry is in a pretty brutal space right now. After the collapse of FTX, a lot of people are cautious about depositing funds into crypto applications, and rightfully so. The fact is that a lot of the leading exchanges out there in the world, like FTX, are registered somewhere in the Bahamas. There's some distant entity, and they don't follow the same kind of compliance rules and regulations that traditional banks follow, or traditional financial institutions follow for that matter. And that's why Credits itself stands out. Credits as a project has focused on a regulation-first approach, essentially making sure that they're not just KYC compliant and all the standard procedures to be compliant with KYC or AML, but they follow standard bank banking regulations in the EU in order to be a compliant service provider for its mobile application. So this allows it to offer not only banking grade services, but to give users peace of mind knowing that the application is following best practices. Outside of that as well, when it comes towards some of the benefits, one of the big ones here is that the users in traditional crypto applications struggle to be able to send their money. So if we think about it, when you're utilizing an application like Coinbase or Kraken, these are, while reputable exchanges, nothing more than brokers or exchanges. They only offer the ability for you to deposit money usually from your bank account to go out and purchase cryptocurrencies or sell and then eventually move it out of the exchange account. And while that's okay, it's not a full suite service. So being able to actually have everything from one application, being able to buy and sell crypto into fiat currencies and being able to send those globally and having liquid actions that you can take from within one application in a practically instantaneous or near instantaneous fashion is a really big selling point here for credits long term. And of course, on the third point of this, crypto itself is still incredibly confusing, and that allows a lot of companies to get away with charging a lot of money on transactions. I want to go ahead and spend some time here to talk about this because this hits home to me personally. I also, like Igor and the team who have been working on credits right now, have been through this journey of trying to build an all-in-one application. And one of the biggest problems is that in many cases, in the early stages of building a kind of neobank or fintech service provider, the thing is you have to work through partners. And if you look at the list of some of the major providers out there, I won't really name names, there are a lot of service providers that are some of the top fiat on-ramp gateway tools for new neobanks like credits that unfortunately charge upwards of 10% or more in fees, not just directly through the fees, but also through the spread, a hidden fee where they give you a heightened market rate that you need to purchase for or a lower rate that you'll be selling at, essentially having a markup that's blended into the price that you don't see. And this has been a way that these service providers have taken advantage of so many everyday users. So it's not really giving you a good deal when you're purchasing or selling crypto. And that's where again credit steps in, offering much better fees and actually providing the service of a traditional exchange by offering liquid asset purchases as well as asset sales. So this is again a full encompassing application that keeps in mind cost, giving you efficient orders, allows you to have peace of mind with knowing that your funds are managed in a safe way and within compliant frameworks. And outside of that as well, when it comes to credits, at the end of the day, you can access and do full payments with your funds, not just cryptocurrencies like a traditional crypto wallet or exchange, but also through traditional payments. So this is really exciting stuff here. Now I want to go ahead and demonstrate some of the UI here on the screen. I want to go ahead and demonstrate some videos. I'll show one, for example, of doing a traditional swap. As you can see, the user experience here is relatively intuitive. You're getting a much better rate, the actionable market rate for these cryptocurrencies, and seeing the actual transparent fees when you make transactions. Once more, you have the ability to have practically immediate liquidity by being able to sell your crypto assets or take existing fiat currency that you already have in one of your credits accounts and transfer it and top it up essentially towards a Visa or MasterCard account, allowing you to go out and spend money in the real world from your traditional fiat or cryptocurrency assets. This to me is a really big feature here and is one of the reasons why credits is something that is consumer friendly and allowing everyday users to actually make crypto real in the physical economy. But some of you might already be asking, Nick, how does credits offer all of these services from one application? Well, they do this by tapping in towards industry-grade leading service providers in their respected fields. Players like PayPal when it comes to facilitating payments and fiat gateways, as well as Unlimited when it comes towards providing debit card services to users, and also crypto payment providers like Mercurio. So this allows credits alongside its already existing technologies that it's built in-house to offer a clean user experience, and I think also bolsters the security here by utilizing these tools in some of these services. And this for me really makes me excited about the potential of what credits has to offer. But I think this begs the ultimate question here. Why should we be excited about what credits is really building here? To be fair, there are some other neobank applications out there. There's Nubank that's focusing in Latin America. There's Revolut that's pretty well established throughout Europe. And the question is there enough room here for a player like credits that's up and coming into the space? I think there is a huge case for Credits here. And I have to say that after following the project over the past couple of years, while Credits has built some really interesting technologies, I think that their focus here on building this mobile application is what could really propel the Credits ecosystem long term. Because Igor and the team understand one fundamental element here, and that is that neobanks are going to continue growing over the next couple of years. To really put this in perspective, Warren Buffett, someone who is quite absent of investing in new technology, especially ones that are early stage and not making too much money, he made a huge stake in Nubank as a platform. And I think this already tells us right here now that even traditional investors who are not very tech savvy like Warren Buffett, they get that this is going to be a massive market. It is estimated by many studies that over 50% of payments by 2030 are no longer going to be processed by banks. That is a bold transformation for the financial sector. And it is going to mean that a lot of the valuation and a lot of the users that are currently living within the traditional financial system are going to need a new home. And it is going to mean that there's not going to just be one player in the space. There are going to be a basket of different players, similar to the fact that there are dozens, if not hundreds of banks in practically any given economy. So as users are going to have different options, I think that a crypto-focused neobank like Credits has a lot of opportunity to succeed, offering a streamlined crypto user experience with relatively low fees comparative to other providers out there, and offering the ability not just to have crypto services, but those traditional banking services, as well as nice additional ones that you might get only in a neobank application, all within one mobile application. Now, if we understand the market opportunity is practically hundreds of billions, if not up to potentially $1 to $2 trillion over the next coming years for neobanks, and we understand that this is going to be an open sea market where there's a lot of different players, I think there's a pretty compelling case here for Credits as an application. I'm willing to give it the benefit of the doubt that they can go out there and really capture a good portion of the market size, and potentially even compete with some of the consumer-facing applications like Crypto.com or Robinhood. Now, if Credits can achieve this, I think there's going to be a good case that Credits will become one of the leading players in the crypto space long term, if they can continue to deliver on some of the promised features. And I know that many of you are probably already aware of just how successful Crypto.com was back in 2020 and 2021. Considering that Credits is going to be able to offer a similar offering, if not better, I think that there's a very good chance we could see a repeat of the kind of growth that we saw in Crypto.com in a name like Credits. And I think a really important thing to understand is that this is just Credits in its current state. There's a whole new range of features that are coming in the pipeline, and the application will continue to improve over time. They're aiming in the next couple of months, the next year or so, to offer stock investment features within the application, and have already offered the ability, of course, for Forex and crypto. So by having all of this from within one application, this is going to be one of the most powerful neobank offerings on the market. It's a question of whether or not they can continue to deliver on these features with the already existing ones that they have. And that will have to be told over time to see whether or not they can deliver on that. But for those of you who are interested in the story here around Credits, if you're interested in what Igor and the team, who have been around the block in the crypto space for a long time, are already building, if you guys are interested, there is going to be a fundraising for the project through a crowdfunding platform known as Orderbook. Now, Orderbook has already helped a lot of people. It's a project or platform created by AmbiSafe, which has built a variety of different crypto solutions. They allow people to invest in pre-IPO stocks or early stage companies or ventures. Now, I really like crowdfunding and equity crowdfunding, all types of different paths that allow everyday people to participate. And as different types of governments across the world have started to open up these vehicles for things like equity crowdfunding, it has allowed a whole range of different people to participate in early stage startup ventures like Credits in order to capture investment opportunities early on in them versus waiting for an IPO when they're already multi-billion-dollar companies. If you want to try to catch the train on Revolut or Robinhood, good luck, they're already public. And one of the really important details you guys should know about is that you can also participate within the funding round directly from within the Credits mobile application. This to me is a really novel concept because I haven't really seen anyone do this yet, and I think it's really cool because anyone who becomes a new investor in the ecosystem is enticed to also become a user, getting a feel for the application and seeing what Credits has to offer. So I think this is a really awesome way to show investors what Credits has to offer as an application. And they're doing the raise through an STO setup. So this is essentially utilizing blockchain technology to be able to do things in the most transparent and secure way possible when conducting the funding round. But the biggest point here, again, I want to come back to is it's all about finding these companies early on, not focusing so much on the bigger players that are already established. So if you want to catch something early when it's potentially in the couple of $1 million when it comes to its valuation versus billions up to hundreds of billions, then this is where you want to look for. Essentially, you want to capture companies early on. That's why when I founded my own crypto startup, we did an equity crowdfunding. It allowed participants to invest with a fraction of the traditional investment size, where usually tickets can be upwards of 50,000. And what's really great here about the offering on order book for Credits as a platform is that you can invest as small of an investment as $50 to get some exposure to the platform. But you can also invest larger amounts, and accredited investors can invest a minimum ticket size of $50K or more into the project. The platform is aiming to raise over $8 million for this round in order to accelerate it and get it ready for the next bull market to offer the best seamless user experience for the end users. And at the end of the day, while I recommend you guys do your own due diligence, I recommend you guys read through the documentation. Don't just take what I've talked about here at face value. I want you guys to see whether or not it's a platform for you. I think that Igor and the team have made a really solid focus here. This is probably the most marketable product that Credits has built so far to really bring in a whole new wave of users into the crypto space that I think is going to potentially have a big impact, similar to a lot of players like Crypto.com or Revolut when it came to traditional neobanking. If we could get something that is as powerful as those two applications have been, and seeing the amount of user growth and valuation increase that those companies created, I think that Credits has got a good shot at this. And the fact that they've already been building all these features out before really pushing a major go-to-market, they've already got about 1,000 users utilizing the application, as well as generating revenue already. This is going to put them in a good position going forward in this bear market, as a lot of players like Celsius, FTX, BlockFi, you name it, a whole range of those niche providers that focused on just crypto exchange services or deposits to earn interest, those providers have been completely wiped out of the market, giving a whole new range of opportunity for new players stepping in with better regulation, better compliance, and providing a better overall user experience that's more in line with a traditional banking application. So I've rambled on a good amount today, guys. If you guys are interested to learn more about what Credits is doing, I highly recommend you guys check out the link down below in the description where you can find some more information on what Credits is aiming to build. But at the end of the day, guys, do your own diligence, check it out if you have the time. I definitely think it's something worth looking into. But until the next video, everyone, thank you all so much for watching, and I'll see you all in the next one. Take care, everyone.